Hey guys, welcome back to another video. Today we're going to be talking about sales techniques for commercial bankers. And this video is geared towards young professionals and commercial bankers that are looking to add different avenues of lead sources to allow them to obviously achieve their sales targets and become better bankers in general. So hopefully that you found this video helpful. And if you do, please do share it with your colleagues, and obviously like and subscribe to the channel. So I'm going to give you a ton of techniques that I've learned over the years being a commercial banker in the lower mid-market space in Canada that can be applied across North America in general to originate business loans for commercial bankers. So let's get into it. So there are multiple avenues to originate deal flow, but in general, the easiest way to originate deals is to leverage centers of influence, COIs. And these are business professionals serving the same target demographic of business owners that you're looking to work with. So, for example, it could be accountants that are working with lower mid-market companies in your local region, providing tax and, audit and review engagement services. And obviously, those same customers may need financing solutions whenever they do, and you being top of mind leads to that deal. So what I found is that direct calling is very time consuming, very low in effectiveness, and can be a bit of a grind and result in lowering your confidence and your ability to kind of feel, have that mojo to sell to end clients. So working through COIs is a great long-term investment because over time, if you build a stable of 10, 15, 20 accountants and 10, 15 real estate agents, on a monthly basis, you're going to get anywhere from 5 to 10 opportunities that you analyze that maybe one a month will convert into. And if you're doing 10 to 12 deals a year, you're more than clearing your annual sales target and making the bonus that you want to earn. So COI selling and connection-based selling is the best way to approach commercial banking over the long term. Now, this requires you investing time up front to meet these people. These people are not going to give you a deal right out of the gate, probably not even in the second or third meeting. It's going to take at least 6 to 8 months for these professionals to feel comfortable with you, to feel like, you are someone that's timely and professional and that can deliver on a lead that they're going to refer to you. It's very rare that you will call on an accountant for the first time and they'll give you a deal. You have to repeat. You have to follow up. All great deal makers follow up. So, you taking the long-term approach and maybe even bringing something to them, whether it could be a, connection or it could be one of your clients looking for accounting services or legal services, will open up the floodgates and will allow them to feel comfortable with you and feel like they owe you something because you're already giving them something back. So take the long term, always come first with something that you can give them. And then over time, you will see the rewards of these seeds that are planted across the various areas of the COI network. So I'm going to go into each one, talk about each one, and give you some techniques on how to maximize the deal flow from each COI source. So let's talk about business brokers. They can be a very good source of leads. And especially, it allows you to deepen your relationships with prospects and clients within your existing book of business. Now, brokers are focused solely on selling businesses. And what they typically do is they'll have a teaser, a one-page, no-names teaser describing the opportunity, maybe the asking price, some high-level financial terms. And if a buyer is interested, they'll sign an NDA and then they'll get a CIM, a confidential information memorandum. So, realistically, they're going to be taking that teaser and giving it to a lot of people. What you want to do as a commercial banker is take that teaser and bring potential buyers to the broker. And ultimately, if you can bring a buyer that's successful in submitting an offer and winning that offer, I'd say 9 times out of 10, that buyer is going to feel very indebted to you, loyal that you brought them the deal, and they're going to go with you and get the loan finance through your bank. So it's an easy way to essentially take your existing book of business and sell opportunities that are out there in the market provided by not just one broker, but you could be dealing with 20, taking all those deals and bringing it to your various clients. And you typically want to match clients based on industry and size. So if a broker is selling a transportation company, you go to your transport clients and you share the teaser with them and say, hey, have you thought about this one? This looks like it might be a good fit. And so, in most instances, I would say the success rate is maybe 10 to 25%. You're going to be sharing anywhere from 4 to 5 teasers before something connects. But, what it does is it allows you to touch base with your client. It shows a willingness for you to add value to your client. So they think more highly of you. It allows you to add value for brokers to stand out in their eyes. And as well, it may eventually lead to a lending source. So it's a really good way to generate deal flow for you as a commercial banker, typically doing term loans. So you want to be in that scenario where you can provide senior cash flow loans or equipment loans or real estate loans and provide the holistic banking product solution if ultimately that client submits an offer and wins the deal. So when you're meeting with, here are some tips. When you're meeting with prospects and clients, you always want to ask, around the middle of the conversation, hey, by the way, I have a really good network with business brokers. Are you looking to buy anything? What industries interest you? What should I look out for on your behalf? And, take down those industries. And it's as simple as, yeah, you know what? Like if you see anything in the electrical contracting space, let me know. And, that let me know gives you the opportunity to touch base with that client. And also you can go to the broker now and say, hey, listen, I just met a high net worth investor who's looking for electrical companies. How you doing, by the way? Do you have anything in that space? Boom, you've touched base with 2 people and you're already trying to make connections in your network. And what that does is over the long term, again, it's something that not a lot of bankers do, and it allows you to stand out and really add true value to your clients. So another thing is, don't waste your time with small business brokers if you're in the mid-market space, and obviously don't waste your time with the KPMGs of the world if you're lending in the lower mid-market space. Target brokers that are selling businesses in your market segment and of the size that you're looking for. So when you meet with those brokers, you want to ask them for those no-name opportunity teasers. Sometimes they'll have it on their website. Sometimes they won't put it on their website and they'll just give it to you. And so just explain your approach. You say, listen, I'm not going to share anything confidential. What you've put in this teaser is all that I'm going to share with my clients. But I'm going to bring all of my clients to you as the broker and allow them to decide whether this is something that interests them. And being on the broker side now, I'm an investment banker today through my company, Robly. I love bankers that do this because I used to do this, and it speeds up my process because I get to meet more prospects that may potentially want to buy my company. But as well, from the banker side, they're bringing an opportunity to a client and really proving to that client, I'm different, I'm better, and you need to stick with me. Now, if the opportunity connects, then it's a fit. But sometimes, the prospect, will not connect with that opportunity, but you'll touch base with them. And if it does connect, then they're indebted to you and they'll work with you. Now, one of the things you have to realize with this approach is that it's pretty tough. Not only are you going to bring an opportunity to a client, but then that client has to win the auction, the bidding process to win the ultimate deal. So to save you time, what I would recommend is that you don't, some clients may say, okay, what kind of lending are you going to do on this deal? And you give them high-level terms and nothing else until they get an LOI signed. Because before that LOI, it could go to another buyer and you wasted a bunch of time analyzing a deal that may have never come to fruition. So you give them email EOI terms, give them a quick expression of interest of how you're going to lend on the deal, but everything else you'll say, hey, listen, if you want a full term sheet, get the LOI signed up first. That way, you're quick and you're efficient with this, because this can be a bit time consuming if you're going to do 20 of these in a month and, nothing really converts in that month. So you want to be pretty efficient in the way you're doing. But ultimately, if you're creating these opportunities, and the last point is, when you're going to brokers, these business brokers are dealing with tons of lenders. So they know a lot of people out there in the space. But if you're bringing buyers to them, you immediately stand out, and they probably are going to feel indebted to you over the long term. If you've brought them, several really good buyers that converted into actual deals, they're going to feel indebted to you that when there is a financing opportunity, they come to you first, not someone else. So it's really a great win-win situation when you're working with business brokers. Now, the accountants are probably the best source of deal flow. And really the challenge with accountants, though, is that a lot of bankers know that, and they're going to go and try to work with that same accountant. So you have to stand out. You have to really generate the buy-in and the win-win mentality to convince an accountant to work with you rather than someone else at your same bank. Because you may be working with, there may be 50 relationship managers covering your state or province. So how do you stand out? So these are the reaches. The first one is Bankers usually will come across clients that have notice to reader statements, NTR statements, that require an upgrade to review engagement statements. A lender is not going to lend on NTR statements because there's no real accounting done on NTRs. It's just a summary of the QuickBook accounts. Whereas on a review engagement, there's actual confirmation of the financials. So lenders require you to review engagement statements. So when you go to an accountant, all you have to say is, listen, I do about 10 deals a year. And do you do any review engagement upgrades? Yes, most people do. Okay, perfect. Well, I have a lot of prospects that have NTRs that need to be converted to review. So I want to make sure that, you're my guy. And you show that level of commitment, and then you start referring those opportunities over. You're not giving up anything because it's not like you're fighting for the accounting business, but you're paying attention to those situations. So when you have a client that you're dealing with and, they have NTR statements, instead of saying, hey, go to your accountant and get it reviewed, you can say, hey, I know an accountant that could do this review very quick and for cheap. Boom, you take that lead, you give it to your accounting friend, and now that accounting friend is indebted to you. Another one is quality of earnings. So in a situation where a company is buying another company, and that maybe that target company has notice to reader statements or has a lot of EBITDA adjustments, accountants will prepare a detailed quality of earnings report which summarizes the EBITDA performance of that business. And that's a $10,000 to $20,000 report that generates a lot of fees for the accountants. So similarly, when you're dealing with your prospect on the lending side, you can say, hey, listen, the bank's going to require you to get a quality of earnings. And by the way, I have some people that I want to put you in touch with that are really good and competitive and can deliver something quick for you. And so you take that lead, you give it to your accountant, bingo. You've created that two-way street where you've brought a lead to them first, show them your willingness to add value, and they will feel more and more indebted to you to refer business to you as well, because they do have a lot of business. They're going to work with thousands of business owners in your region that, on an annual basis, meet with that accountant, and they're usually the first point of contact for the business owner when they say, hey, listen, I'm thinking about borrowing some money. Who do I go to? So the accountant is a very good lead source. Now, there are some questions you should always ask accountants. How many clients are looking to buy businesses? How many clients of yours are looking to buy a piece of property or equipment? Always probe on those touch-based calls. Probe and ask the question. Don't let them bring leads to you. You ask them if they can think of any clients that are looking to buy a business, buy equipment, buy property, or maybe buy out a shareholder. And, by asking that question, it will make them actually think through their list of clients of those potential deals. So, the thing with accountants is they're so busy, you can't expect that they're going to just think of you right off the bat. You have to ask the question. Now, they're not going to be open with their client list early on, but if you do invest time and you kind of keep giving them leads, over time they do open up. And some of my best COI contacts, both on the commercial lending side and now in M&A, are accountants. They're really good referral sources. Now, if you're reaching out cold via email or LinkedIn, time the reach out with the busyness of their business. Accountants are really busy during the winter and spring seasons because of tax season. And as well, during the summertime, usually they're taking time off to catch a breath after the busy tax season. So the best time to reach out to an accountant is usually in fall. The fall is really good, September, October, November. And as well, I would say late spring, kind of that April, May region would be really good. So those are the times to reach out. If you reach out to them in February or in March, good luck. You're not going to get a lot of answers because they're busy with tax. And it's not because they don't want to connect with you. It's just that, they're busy. So, time your reach out appropriately. Another really cool thing I found out over the years is that I would always pay attention on LinkedIn, especially the big firms. They would always put out these posts about, we've promoted a senior manager now to partner in the accounting division. And so partner promotions is a really good area to target if you want to reach out cold and meet some new accountants, because that most likely that senior manager at that accounting firm has no outbound client-facing contacts in the commercial lending world. And they'll be entirely reliant on their other partners in the group if a situation comes up. So you reach out to them and say, hey, listen, congratulations on your partner promotion. I'd love to connect and kind of be your point of contact for my bank or whatever the case is. And I found that a lot of times those new partners respond really fast, like, perfect, I was worried about this, like, thank you so much, like, it's really good to kind of have someone in my Rolodex that I can reach out to. So that's a really good area to target. And if possible, focus on actually even lending to accountants. If you can lend cash flow loans, accounting buyouts of one accountant buying another accountant's practice are really small deals. But what you're doing is you're making an accountant become your client. So naturally they're going to go to you because you've lent to them. You're already talking to each other on a quarterly basis. So try to actually target accountants as clients, and that will obviously lead to them also referring some of their clients to you for future financing deals. So what about insurance agents? So I personally had mixed success with them. They're really good in terms of making introductions to other COIs, because insurance agents are always connected with COIs in general. So they could connect you to another accountant in the region, another lawyer in the region that they're working with. But direct business leads are pretty difficult. And every now and then they will. But the problem is you always have to think about the COI. When are they going to get involved in the deal? So put yourself in the scenario. If a business owner wants to sell, they're most likely going to reach out to their accountant first. So an accountant's a really good situation. But do you think a business owner is going to reach out to their insurance agent to let them know that they're going to sell? No, right? So they're not going to be ahead of the curve in terms of seeing a lot of these business moves by their clients. If they're really close to some clients, then it will work, but in most instances, it won't. So you're not going to get a ton of direct deals from them, but you're still going to get COI referrals, which may lead to an accountant that will give you a direct deal. So it's worthwhile targeting insurance agents just as a secondary market. Now, make sure to target commercial insurance agents. Home and auto and more personal insurance agents are working with, maybe high net worth individuals, but not business owners. It's not their core focus. You want to work with agents that are doing life insurance planning, that are doing strategic key man risk insurance policies. These are the policies that you want to focus in on because they're always lending to business clients, not home and auto and residential and retail clients. Similar to anything else, you want to find a win-win solution and get the agent to buy in. So I have one or two really good insurance agent contacts in my network that it's taken me a long time, but I've really educated them on asking certain questions when they're in those preliminary meetings with their prospects to say, hey, listen, I'm signing you up for my insurance products, but do you have any challenges with your bank? Do you have any capacity issues with your equipment? Have you thought about, borrowing some more money and growing the business? Oh, I have a lender that you should speak to. So convincing and educating that agent to speak on your behalf requires you to refer business to them first so that you can develop that relationship. And the best piece of business, and I find that no one does this, no one in my bank did this, is when we lend, we're always asking the client to get business interruption insurance. It's a very common boilerplate security policy that banks ask for when they lend to businesses. And additionally, in some instances, we'll ask for key man insurance policy risk. And what we end up doing is we give them the term sheet, and a lot of these bankers will just say, okay, go get that and set it up in place as a condition for funding. And, if you can get it, then perfect. But what I do is I give them the term sheet and I'll say, hey, listen, the bank is requiring you to get business interruption and also key man risk. I have a really good insurance agent that you should speak to and at least get some quotes from. Do you mind if I introduce you to him? And make the move first. In most instances, I would say 9 times out of 10 my clients will say, sure, I'm always open to meet new insurance agents to at least explore if I can reduce my costs. Bingo. That's all you need to do. It's not about getting the deal for your insurance agent. Your agent has to do that for themselves. But you're bringing a lead that's live that is going to require business interruption or key man risk. And that's really good. So I've done that a lot. And so that opened up the floodgates for these insurance agents that I work with to say, man, Robert just knows that what I need to return the favor to him. So that's really, really important. The other thing is, agents are going to work with a broad range of businesses. So say, for example, you have an M&A mandate. You have one of those teasers that you want to circulate, and it's a teaser in the electrical contracting space. You could pick up the phone, and in the midst of you referring another client, you could say, hey, by the way, I've also seen there's a deal in the electrical contracting space. Do you have any contractors? Yeah, I do. Oh, let me connect you with him. Boom. You get connected, you share the teaser, and you say, hey, I'm going to connect you with the investment banker on the file. And so you've leveraged your insurance agent to get a direct business lead contact with the teaser, and they've taken that teaser and the direct business lead and given it to the investment banker, and that may lead to a deal as well. So, there are different ways to play the pawns and the pieces on the COI board, but the interconnectivity of it all is actually quite simple when you actually get the hang of it, because everyone's referring everyone everyone else to each other, right? It's a very small community at the end of the day. The other thing is, don't work with bank insurance agents. They're buckets. They suck, to be honest. The highly profitable agents and the most successful insurance agents are independent. They're working on by themselves because they know that they're bringing in so much business. They don't want to give a piece of it to the bank. They're working by themselves. So you want to work with independent insurance agents. They're going to have the broadest networks, and they're probably going to be the most entrepreneurial and aggressive from a sales perspective. The insurance agents at the banks are typically a lot more introverted and highly dependent on internal referrals. So funny enough, if they bring you a deal, that business is most likely already being banked by your bank. So there's no real lending opportunity for you to win. So don't waste a potential business interruption or key man insurance referral with someone internally. Refer that outside the bank. The bank's not going to pay you for it, right? If you refer it in, you refer it out and win some brownie points with the good insurance agents. So wealth advisors. So you kind of think about, for every COI source, you want to think about when they get involved. So wealth advisors are really, really good in terms of seeing the long-term outlook, in terms of succession planning and estate planning. So they know when their clients want to sell, but they're not going to have a really good insight into when their client and their business is going to need an equipment loan. So you want to kind of obviously target this group selectively. If you're a big cash flow lender and you want to do maybe management buyout financing and cash flow lending, then wealth advisors can be a good source of business because they're going to refer those succession planning situations into you. But if you're an equipment lender, wealth advisors are fairly useless. Like, they're not going to refer a lot of business to you. You're probably going to waste a lot of time. So it's a good lead source to keep in touch with, to have a few key contacts in. But what I've found personally is that it is a lot more one way. Wealth advisors always look at commercial bankers as a great source of deals to onboard clients that you have in your book onto their wealth management platform at the same bank. But, it's not a two-way street. I have not had a lot of success with wealth advisors on the commercial banking side. On the M&A side of my day-to-day right now, they're actually my biggest source of deals, and they're the best, and I love them. So it depends, again, on what you're selling. But with commercial lending, I would say wealth advisors probably not the best. But if you wanted to maximize your return with these, I'll give you two situations. If you're working with a senior wealth advisor that's been at the bank for 20 years, they probably already have contacts within the bank, within the commercial bank. So they're not going to be loyal to you. So even if you might bring them a deal, it's not going to open the floodgates. They're not going to feel really indebted to you. They'll probably just refer it to their buddy. If they had a lead, they'll refer it to their buddy that they've known for 20 years in the commercial bank. So what you want to do is you want to target younger wealth advisors that don't have an established book, that have joined the bank in the first 1 or 2 years right now, and are still cold calling, reaching out to a ton of prospects and business owners in your local area, taking on all these calling lists. Leverage their cold calling so you don't have to. Because if you can convince and get the buy-in of that wealth advisor to say, listen, we can both win here. You want to bring a holistic advisory relationship to that client and that prospect. And one of it is going to be lending, business lending. You can use me as a tool in your toolkit. And so if you can get that buy-in from the young wealth manager, he's going to cold call businesses on both his and your behalf. So work smart and use the young guys. The old guys, they're not loyal to you, and they're probably not going to refer deals to you. Don't waste your time with them. Now, the other thing is, and I talked about this in the last slide, the COI board, you can connect people across the board. So say, for example, you have an accountant you really want to develop a relationship with. And, you have a few wealth advisors, they're not referring anything to you. Funny enough, wealth advisors refer a ton of accounting work. There's a lot of accounting work for those people. So, you take a wealth advisor and connect it with your accounting contact and you say, guys, I think you should meet. Hopefully it works out. Let me know how it goes. Boom, you've added a ton of value to both of those people because that accountant now has a referral source from wealth, and wealth is a primary source of business for accountants. And for wealth advisors, they're always looking for good accountants to have in their Rolodex. So it's a win-win. So you've not only added value to the accountant that you wanted to impress, but you've also used your wealth advisory contact in some way and just connected him with someone else. So maybe it's not a connection with your clients, but it's interconnecting different COIs to add value. So think about that. Think about the entire board available to you. Now, similar to, an agent, lawyers do not get involved early on in the process. They will get involved once a deal is live. So in an M&A situation, they'll get brought in once the LOI is done up or being done up. So they're already 3 to 4 months behind schedule, and lawyers are probably not even going to get involved in the business owner's decision to buy a piece of equipment. So they can't see really into the pipeline to say, hey, I have a client that may need some financing. You're not going to get a lot of that from lawyers. What you're going to get from lawyers, and especially experienced lawyers, is that they may convert and become much more advisors than lawyers. A lot of the junior lawyers, I think, is a waste of time. You just don't spend time with them. They're not going to give you a lot of lending leads. And this is again solely for commercial business loans. I can't speak for residential mortgages, but for commercial loans, they're not going to give you a ton of leads. But experienced lawyers, so the inverse of relationship of wealth managers, is that with older lawyers, they're now at a point where they don't care about billable hours. They're focused on long-term advisory relationships with their core business clients. So they may actually be able to see into the future and say, hey, I have a client that I know he just bought a piece of property, maybe looking to retrofit that property. Let me reach out to him and see what I can do. So there are those situations where older experienced lawyers may actually be able to refer deals to you. So it's still a worthwhile COI source to invest some time into, but I'm going to be honest with you, it's not going to be the highest rate of return on your time. So the tips are, as I said here, mention your target experienced lawyers. Lawyers work with a ton of bankers. So if you wanted to stand out, you need to target, certain areas of their practice. And one of them is bringing tax situations to them. So there may be a situation where one of your clients has some kids and they want to set up a trust or do some estate planning. So you can go to that lawyer and say, hey, listen, I know we spoke a while back. I think I have a client that may be interested in working with you. And you bring that opportunity to them, to that experienced lawyer, and he's most likely going to pot it off to a junior lawyer, but now you've shown your willingness to share deal flow with that lawyer. And old school lawyers, there's that almost loyalty to repay you. So I've found that, when I do refer leads to experienced lawyers, they actually come back and they actually try to give me something in return, which again, leads lead to leads. So, trying to make connections is always going to work. So if there's one area that you want to focus in on from your side in terms of opening up the floodgates and giving something to them, always look for tax and estate planning situations within your prospect pipeline and your existing client book. Now, real estate agents are obviously one of the best areas of financing. The challenge I find with real estate agents is they have no loyalty to bankers, and they're going to talk to all of the bankers in the sector. So how do you stand out? Well, as in all of these COI situations, standing out requires you to generate buy-in, to generate, that loyalty in terms of referring work to them as well. So what can you bring to the table? How do you stand out? Well, when you meet with existing clients, if someone has a real estate need or is considering moving, suggest that they have a conversation with your real estate contact. Just making the referral for allowing the agent to sell their services and get on the phone and a warm lead to an agent is more than enough. What's really unbelievable is that bankers are always talking to real estate agents, but bankers almost never refer stuff to real estate agents. It's a very one-way street where agents will refer buyers that need financing to you, but what do the bankers have to offer agents outside of, maybe a one-off situation where a client's looking to buy a piece of property? Well, just real estate advisory and educating them on their leasing terms and all that is really important. So another situation I used in the past is I had a client that wanted to understand the leasing rates in their local market. It's like, hey, who do you know? And I was like, oh, I know someone at Colliers. Here, let me just put you in touch with him, and he'll give you a call. And it was a 15-minute conversation that led nowhere. But that real estate agent at Colliers was like, wow, you know what, like, Robert, I appreciate you kind of thinking of me here. Like, at least now I'm on their radar, because they also understand in their line of work, it's a long game. It's a long sales cycle. So just meeting business owners is adding value to that real estate agent. So try to make just simple introductions where it could be just a 15-minute conversation, but it's still adding some value to real estate agents. Now, another situation is, say, for example, you have a contact with private lenders. You work with a private lender. Well, private lenders always love real estate deals, and real estate agents always have those tough deals on the fringes that may need some private loans. So again, COI interconnectivity, connecting one COI with another COI is a good source of goodwill for you in general. So connect a private lender with a real estate agent, and that results in some goodwill. Another thing is some banks will have like referral programs where they could pay certain kind of bonuses and fees to agents. Just make sure that check to see if your bank has that. I mean, my bank didn't, but I found out that some banks did. And then it's a five to $10,000 for a financing lead, but that $5,000 to $10,000 is something to put in the pocket of that real estate agent. So if you have a financing referral, always mention that. Pound the pavement with every real estate agent that you talk to and say, hey, listen, I can get your deal done. You can get your fee off the deal and also pocket another 10K just by referring it to us. So that's something to keep in mind. Now, for business lenders, residential real estate agents are not a high quality source. When I was looking to expand my network of COIs in the real estate space, I reached out to a few residential real estate agents, and they know a few high net worth people, but there wasn't any real leads that came from them because they were selling luxury homes, multi-million-dollar homes to high net worth people, but they weren't having the conversations from the business perspective. They were having personal residential real estate strategy calls, not strategy calls related to their business. Versus a real estate agent that deals in industrial or commercial buildings is naturally going to advise that client on how the real estate fits with their business needs. And so they're much more entrenched with that business owner in terms of what they need from a financing perspective. So I find that residential real estate agents are not a good source of business, whereas commercial and industrial real estate agents obviously are a good source of real estate. Now, excuse me, similar to a wealth management, COI contact, you want to focus on younger junior real estate agents. They're unproven. They probably don't have a network of contacts right now, and they're doing a lot of cold calling. So leverage their efforts, generate the buy-in you need with them, and just say, hey, listen, I'm there if you need me. And just ask these questions to see maybe it's not a real estate situation today, but you can add some value by referring them to a banker. And so generate that buy-in with younger real estate agents. It's easier to connect with them. And as well, they're going to be working twice as hard as the established guys to just get in front of businesses. And what you're looking for when it comes to COIs in general is volume of leads. If you get one lead from a COI once a year and you get, 5 leads a month from another COI, you know where you need to invest your time in. It's about the volume of leads because the probability of conversion is very low. You may convert 10 to 25% of your leads from COIs in general, so you need to get the volume up so that you can pump those numbers higher. Now, there are a few other miscellaneous COIs that I've kind of dealt with in the past with some mixed success, and these are kind of the 4 that I wanted to tag on here as well. The first is part-time CFOs. Part-time CFO is, a business may not have the existing bandwidth to support a full-time salary of a controller or CFO, but they still need that advisory, relationship and the support that a CFO can bring. So part-time CFOs will come in maybe 1, 2, 3 days a week and are really more on a part-time basis providing advisory services to that end client. They will work with a set of owners and a fixed set of owners, so it doesn't change over. So they may work with 5 to 10 companies. And so when you touch base with them, you should ask if any of their companies are, looking for financing. But if they say no, or there's no real opportunity to, there's not enough client turnover for them to really generate opportunities in the future. So this is more of a touch base COI. I would say they're kind of, they're in the secondary or maybe even the third level of the ring, and you kind of want to touch base with them every half year just to say, hey, what are you doing? What are you kind of seeing from your clients? Does anyone need some financing? But you're not going to get a lot of volume from them. Business coaches, similarly, there are some business coaches that will get in and are really focused on day-to-day cost cutting and process improvement and all that, and they'll work closely with the management team. But, there's also business owners that are more confidence owners. It's about success and executive leadership and coaching business owners on the mentality side of things. And those guys are just useless. They're not going to give you any deals because they're not talking to those owners about financing decisions. Whereas maybe the cost consultants and the day-to-day kind of business improvement coaches, they will sometimes come across leads. So it may be worthwhile to touch base with them on a half-year basis as well. Consultants, I found no success with them. They're hyper-focused. They're typically, stuck to one engagement. They're really focused on that one engagement. So, they will not be in the room when a business owner is talking about financing decisions for the most part. Maybe there'll be 1 or 2 leads in the future, but I find that consultants are a very low volume lead source for COIs. And then the other one that I find is very high volume is high risk lenders. So if you can generate the buy-in and build the relationship, high risk lenders actually can be a pretty good source of deal flow for you, because typically they're going to come across deals that may not be a fit for their lending product. Either, they're too expensive and the client needs something more traditional, or maybe a situation where they're just so busy capacity wise that they want to refer it to someone and obviously not sit on that client. You want to find someone that is a good client service, high risk lender or private lender, and that understands the value of having a network of other lenders that they can refer deals to. And in most instances, those high risk lenders are interim financing lenders. So they'll provide loans for up to 1 to 2 years at a high interest rate, interest only. But eventually you have to take out these loans. You're not going to you're not going to keep a 12% loan on the books for 5 years. You're going to keep that loan on the books for 12 months, get through what you need to, and then eventually refinance that loan. So you want to be the takeout solution for that high risk lender in the future. So always be on top of them. Always ask, hey, do you have any upcoming renewals or situations where you may need some takeout financing, and probe on that. And I found that to be successful. I mean, there's a few high risk lenders, the Fiera Capitals and the Cortland Credits of the world in Canada that, they would deploy loans, and 3 to 4 months before that 1 year term, came due, they were already pre-planning and reaching out to senior bankers to say, hey, listen, we have a client that may need to be refinanced by you guys. And so get on that radar and develop those relationships, because it could lead to some deal flow. Now, direct outreach, I'm going to kind of provide just a bit of commentary on this. I already kind of mentioned it before. COI networking is the best and most effective way for your time to get deal flow. But, direct outreach is something to kind of complement your strategy. And especially in the early days when you're just starting off as a young commercial banker, it can also be the only way that you start meeting new people. So there are a few areas that you can reach out, do the reach out through. But I would just caution you in saying it is a grind. You need a ton of confidence. You need a ton of energy. And you need to realize that, it's a very low probability of anything coming through this. I would say my direct outreach efforts were very limited in my early time as a commercial banker, but I eventually moved over to COI network selling because it was way too much of a grind, and I found very little success. It just took up way too much time too, and I couldn't have time to really even process the deals that I did have in the pipeline. So there are 4 approaches. Cold emailing is when you're just sending a blank, like a email saying, hey, listen, my name's Robert. I'm looking, are you looking to borrow money? Blah, blah, blah. People are bombarded with that every single day. It is a very, very low success. You may be lucky, but you need to send, through MailingChimp or one of these mailing lists, a ton of emails to get any sort of traction. Manually typing out cold emails is just pointless. I'm telling you from now, I try to do that, and I wasted probably 2-3 weeks, solid weeks, just typing out emails, copying and pasting names and all that kind of stuff with very little success. Cold calling, if you can do it and if you have the confidence to, is actually pretty effective. And there's a time in the week that's really effective. If you call on a Friday afternoon, typically after 4:30, 5 o'clock, the secretary's probably gone off home early and she's taken the rest of the day off. And if the owner is busy and still works in the business and doesn't have a management team in place, they may be at their desk and pick up that phone call. And you may directly get connected with the owner. And you got to quickly do your elevator pitch, quickly communicate why you're calling and why you may be able to add value to them, and just be very professional and get that practice done. So it may be an approach to try out, but obviously from a personality perspective, not a lot of people are geared for cold calling. It is a fairly difficult line of approach. One that I found to be really effective is LinkedIn. LinkedIn, you have the in-mail feature if you have the premium, but you can also just send a connection and add a note. You'll see you can click the blue connect button and then it'll say send connection, or you can also add a note. And I would add a note and I'd say, hey, my name's Robert. I work with Scotiabank, which was my bank. I do $1 to $20 million real estate loans. I see that you're a real estate investor. I would love to connect. Here's my email. Here's my phone number. Boom. And I would send probably 20, 30 of those a week, and I'd get 1 or 2 back. So, I would actually get some success with LinkedIn. And funny enough, now I'm on the business brokering side. And I think in the last 9 months, I've gotten 1 LinkedIn reach out from a commercial banker. 1. a lot of students reach out through LinkedIn because they realize the power of it. But existing commercial bankers in the field, they just don't reach out, which amazes me. So I can imagine when I was sending out hundreds of these LinkedIn emails, I was pretty much one of the only people showing up in their inbox, and that's probably why I was successful in getting a lot of traction with LinkedIn. Now, events is another way to meet people, and it's a very easy way to just kind of be face to face and start building relationships. You want to look out for your local M&A club. You want to look out for your local real estate investment club. There are podcast real estate investor meetups, and there's also industry events and trade shows. Trade shows I find are very, very good prospect areas that no commercial bankers go to. And the reason why is that if you can go to these emerging high growth trade shows where the companies probably don't have a lot of employees and the CEO is probably at that booth selling his company and selling the benefits of his company, you can walk up to that CEO and quickly say, hey, listen, we lend a lot to your sector. We lend a lot to technology. We lend a lot to mining, whatever the case is. We lend a lot to your sector, blank. And I'd love to be on your radar the next time you need some financing. Here, take my card. And it's as simple as that. And, you being in front of them, you taking that initiative to put yourself out in front of those young entrepreneurs will lead to deal flow. So that's another way to kind of get in front of some people. On the internal networking side, there are actually some pretty good areas of deal flow if you wanted to source deals from the inside of the bank. And a lot of long tenured bankers, funny enough, use internal networking and get a ton of deals from it. I remember I was looking at some of the established bankers in my business line, and I would look at them and they would do no cold calling, no outreach, no nothing, because they had established networks that were just paying them off and quickly returning, opportunities to them. So it can be actually a pretty good area to focus in on as well, but you have to invest the time and you have to be there for a long time. If you're going to be there for 2 years, you're probably not going to see a lot of deal flow from the internal networks. But if you're there for 5-10 years, those internal networks over time, you're going to be growing up with those people in the bank as they kind of climb up the ladder. And eventually those people are going to be in positions of power where they can refer deals to you. And so it could be a potential way to grow your pipeline. So there are 3 areas to focus in on. The first is the branch network. So a lot of these banks have, local branches. And what you want to do is you want to reach out to the branch manager. So I did this a few times where I would reach out to my local branch manager for the Scotiabank and I'd say, hey, listen, I work for the lower mid-market division. I'm sure there are some clients that have outgrown the small business banking product that's available at the branch and may need something that's more mid-market product solution. I'd love to come in and meet your team at your local weekly meetup group. You come in, you do a 5-10 minute pitch, leave some business cards, and leave. And over time, you'll kind of become known as that local banker that's been going into the branches and at least working the branch network to some degree. And so you will get some leads. I got, a gymnasium, a medical office building, a few things I got from the branch network that were eventually translated to deals. The other one is finding your regional VP and focusing on cross-collaboration events. So all the VPs at commercial banking are all worried about everyone works in a silo. We never talk to wealth management. We never talk to investment banking. So all these upper management banking executives are always looking to set up committees. Committees that are going to, put some commercial bankers, some wealth managers, some private bankers, some cash management and treasury people all on a board to share deal flow, to try to cross collaborate and knock down those silos. I would roll my eyes at those events, but over time I actually realized the value of them because I got to meet a lot of other social senior people in the other divisions that then would recognize me as the point of contact for commercial loans. So I would attend all of those events and committees, sign up for those committees, do all the internal conferences and training networks, and don't look at it as I'm looking for an immediate payoff. What you're doing is building an internal brand to be known and associated as that point of contact when a deal does come up on their side of the business. And then as well, within the commercial bank, you're probably going to be serving a certain target demographic. I was focused on the $1 to $50 million term loan range. And then there was a national accounts group, which was focused on $50 million loans and above. And funny enough, national accounts would come across deals that were too small for them that they needed to refer down. So I got to develop relationships with a few national accounts people that would then refer business down to me. So similarly, you don't want to reach out to the director of national accounts because he probably already has a contact at your division, but you want to reach out to the younger guys, the people in that space that are just joining those divisions and are building their internal networks as well. And so time your development of your network with theirs because they probably don't have a contact in your division yet. And so reach out to them and say, hey, listen, we both joined the bank, quite recently, or we've been, new bankers within the last year or two. I'd love to take you out for coffee and just learn about what you guys are up to and what your division is focused in on. And in most instances, there's not a lot of deals that you can refer up, but there's a ton of deals that they refer down to you if you're below them. So focus on the groups above you because they could refer stuff to you. Now, selling to your book is the easiest way to get deals. So usually commercial bankers will view their book as a burden. I got to manage the annual reviews, I got to do the covenant calculations, all this stuff. And none of that is going to count towards my budget and my bonus plan, and so it's not going to get me paid. And so they kind of ignore it. But what I found is that over time, if you can drill down and build a few key relationships in your client book, and I probably had a 100-person client book, and maybe 20 or 25 of those clients I really kind of developed a key relationship with. But those 20 or 25 were wonderful, wonderful people that A, I could bring opportunities to, and B, I could sit down with them and hear their day-to-day challenges and really have a deep conversation about what to expect from their business. So what you want to do is you want to kind of go to your client book and on an annual basis, at least have some open conversations and say, hey, how's your business doing? What's the capacity you're building like? How much more in revenues can it grow on your existing shift using your existing equipment base? Have you ever thought about buying a business? Having these open-ended sales questions that opens their mind and they will feed you information. One of the things I remember, it fits so perfectly. I was having a conversation with a client. I say, hey, listen, how much more in revenues can you grow within your existing business and within your existing building? And he was just like, oh, I think I'm maxed out. I don't know if I can, take on a lot more business. And I'm worried because one of my customers is going to send down a new contract that I want to bid on, but I don't think I can take it on because of the building. So I immediately called my real estate contacts, connected the two of them, and they were immediately or very quickly already looking for a new piece of property to buy. They eventually found that piece of property and they used us for the financing. So I created that opportunity because I listened to what the challenge was. So identify your client needs. And then bring opportunities to them. So say, for example, you ask them, oh yeah, I have some available cash on the side. I'm looking to buy investment properties, or I'm looking to buy another competitor within my space. Then look out for those investment properties and send those teaser sheets to them. Or if it's an M&A opportunity, go to your M&A contacts and business brokers and say, hey, listen, I have a client that's looking to buy in this space. We on the business brokering side love to hear that because perfect. I have a deal in that space in the next 2 months. I'll send it to you once it's ready. Boom, you have that teaser, you send it to your client, and not only are you standing out and adding value to them and showing them that you've listened to them, but they may actually become a buyer and use you for the financing. And then lastly, you can ask for referrals from your clients. Over time, as you're building relationships with them, asking these questions, showing up, maybe making some introductions and bringing some teasers to them, you can also say, hey, listen, I saw that you're on the board of the local Chamber of Commerce. I'd love to attend that event, or I'd love to speak at one of those events. Or I don't think I've ever met your accountant. Can you introduce me to John, please? Sure, yeah, here's John, and here connect. And now you've got a warm lead to a new accountant COI relationship, and you can make something of it. So I always say leads lead to leads. So if you can get your existing clients to refer you to a potential lead source, they may eventually lead you to a deal that will close. So, asking for referrals to COI contacts through your existing book of business, or maybe asking for even, hey, do you know any of your siblings or friends or, old school buddies that are looking to buy businesses or whatever the case is, just get in front of people and try to sell your product and use them to make those introductions. Because reaching out cold, you don't know who to reach out to. You don't know if they're pre-qualified. Whereas now the people that they're going to refer to you are probably pre-qualified. They already know, yeah, this guy's real. He wants to buy a business. He's got some money. And so you're not wasting your time speaking to just random people. Now, I won't speak a lot about this topic, because the point of this video is to share with you how to get deals, how to get those leads. I'm not going to teach you how to get the deal done. And funny enough, like getting the lead is easy nowadays. I find that, like money is so openly available, and a lot of these businesses are always open to talk to you. So, reaching out to businesses, you're gonna get that meeting. But actually getting the deal done is actually fairly hard still. And that's where you're gonna really separate yourself between being a good banker and a great banker. So the one thing I always say, and I've said this in a few of my videos, is that money is a commodity. Don't forget that. You may be a banker, you may come up to them and say, "Hey, listen, I have money that you need," but they could probably get that same amount of money from another bank. So don't misunderstand the situation in thinking that you're adding some value just by giving them money, because money is a commodity. What you're trying to generate is a solution to a problem. You're trying to listen to that client, listen to what their day-to-day troubles are, and then provide a solution to that problem, whether it's a product or whether it's just an introduction. And over time, you build that relationship and eventually win that relationship with them. So I'm going to give you 4 quick tips on how to get the deal done. Obviously, there's a lot more behind this, and maybe I'll make a video on this, but again, not the point of the video today. So the first one is address your needs. You want to make sure that you have a very good understanding of their situation. And usually, most clients have a very basic understanding of lending products. They know that they can borrow a mortgage, but they don't understand the types of mortgages available. 2-year interest-only options, floating rate mortgages, revolving term loans against a fixed asset base, whatever the case is. So you want to kind of, in those early meetings, always educate them to say, "Hey, what do you think you know? And here, let me show you what we can actually do." So sometimes it's just about educating the client about unique product structures and saying, "Hey, this may be something that you need to think about in the future." So I'll give you a live example. I was talking to an equipment rental company, and one of the products that we could do was that we could lend against a pool of assets up to 85% loan to value on an interest-only basis. And it was essentially a floating revolving term loan against fixed assets. So that, as the entrepreneur bought more equipment, the asset base would increase, and we could increase the loan to value and obviously get higher and higher and higher, and he would never have to pay principal on that loan, which freed up cash for him to reinvest in the business and buy more equipment. So, when I would sit down with equipment rental companies, I'd always talk about this product and I'd give them a case study. Storytelling is a great way to educate clients, and you can just quickly say, "Hey, listen, we did this deal and this is what we did and this is the value that they found from it." And they may just say, "Okay, cool," but in their head they're going to remember that story, and when it does come up, they'll come back to you. Now, the second point is cheap pricing isn't always best. And I'm a big believer in this. You have to communicate clearly how pricing works. I'm matching the flexibility and creativity of the term loan with the price. If you want a plain vanilla product, I can go in and give you the lowest price that I can give you. But if you want something creative to free up principal payments, to allow you to remove a personal guarantee, to give you, some relief or whatever the case is, I'm going to need a price a little bit higher. And so if you separate the discussion from rate hunters that are just looking at term sheets and comparing rates between each other to, "Hey, listen, I'm going to be a little higher. I'm going to be 50 basis points higher, 100 basis points higher. This is the actual cost. You're going to pay another $7,000 a year in interest, but here's the benefit that you're going to get." So price the structure and communicate the value of your structure against that price. Don't just throw out a term sheet and not communicate how pricing works. I find that a lot of bankers, they assume that the clients will know and understand that, but they're just, a lot of times clients just go straight to price and forget everything else. Reiterate the value of your structure, not just the price. The third one is very, very easy to understand, very hard to apply. Speed and service are everything. Business owners are very busy and they take your word for it. When you first talk to them, if you say you're going to deliver a deal in 4 weeks, they're going to always hold you to that. And if you deliver a deal in 8 weeks, then you come off as slow and you probably lied to them. So always be truthful and just upfront and open and say, "Hey, here's the process. We're really busy right now. It's probably going to take 8 weeks, but I'm going to fight for you to try to get this down to 7 weeks." And, if you manage that accordingly, you manage their expectations accordingly, the level of service and the quality of service that you're going to offer them is very high. Now, from a speed perspective, if you can control speed, get it done fast. Entrepreneurs are impatient and they're always going to want the deal faster and faster. So from your perspective, don't be a lazy banker sitting around. Push for that deal to get done. Push for the credit app to get done. Push for risk management to pick up the credit app and review it faster. always be fighting internally for that client. You are their internal advocate, and communicate that to the client. Maybe that's one of the things that you do when you're in the pitch meeting, saying, hey, listen, here's a big difference between me and everyone else. I'm the person that's going to go up and annoy credit every single day until they pick up my file so they can review it faster. That reduces your turnaround time, allows you to move fast on your business opportunities. Boom. That's how you communicate speed. And then another thing is a little key structuring thing I always find is just a little extra juice. Provide pay down rewards. So if your risk team allows you to do this, and I would always do this, factor in price step downs as the loan balance gets paid off, right? We always view a loan as very, it fixed in one place. I give you $1 million loan at 5% with a 5-year amortization. But hold on a second. If this person pays off the loan and it's now only $500,000 relative to the $1 million when it was initially deployed, well, the risk of that loan is substantially reduced because the total leverage is reduced. So you should offer rewards as the loan balance declines. So what I typically do is, as the loan gets paid down by 20%, so if it's now 80% of the relative to the initial $1 million, it's now $800,000, they get 25 basis points off the interest rate. And then, if it gets reduced to 50% of the initial upfront amount, or 500,000, then they get another 25% basis points. So you price in and reward pay down, and a lot of bankers don't do that. So when the business owner compares term sheets, they look at your pay down rewards and say, "Wow, that's unique," and they're already factoring in, like, I know I'm going to pay down this loan. I want to pay down this loan really quick, and I'm going to get a better rate over the long term. I'm going to go with you versus the person that has no pay down rewards. So that's another way to kind of really stand out in the term sheet phase. Now, the last slide in this presentation is geared towards junior bankers. And I personally had this challenge as well. Most junior bankers coming out of school, they struggle with the age stigma, right? Bankers are I looked very young. I spoke, still like a young adult. And sometimes, that obviously gets mistakenly read as inexperienced, and you're not able to do a deal by COIs or business owners. So, how do you deal with being taken seriously and avoiding being associated as, some young banker that can't get a deal done and lacks credibility? Well, right out the gate, you're going to have to understand that being young gives you less leeway to make mistakes because your credibility is already being questioned. So you have to be more prepared, more professional, and more confident than the older people around you. So not only are you learning from those people, but you're also trying to better yourself relative to them. So preparation, I think, is very, very important. A lot of junior bankers, they make the mistake of trying to watch, the people around them that are already experienced and established and put in the same amount of hours as them. I would always put in more hours so that I was more prepared and already ready for those opportunities when they came up. So you need to invest the time up front to develop your knowledge more quickly and ready yourself, because you have to pay your dues up front. So don't look at the senior bankers and say, well, they only put in 60 hours a week. Well, you got to put in 70 or even more because you are younger and you have much more to lose in these situations if you're not prepared. So prepare yourself. Now, once you're prepared and once you've done the work up front, you can actually leverage your age to connect with prospects and COIs. And usually there are going to be young accountants, there are going to be young lawyers, and there may be even young entrepreneurs. And you're already well positioned to serve those people. So the first area of the market you should target, in your target range, is young entrepreneurs that are closer to your demographic. Would they want to deal with a commercial lender that's in their mid-20s or in their mid-50s that doesn't understand their technology business? Obviously, they're going to want to deal with you, the younger person. So match your target client demographic with your age as well to try to balance that out a little bit. I'm not saying that only go after this demographic, but if you find that this is a big problem and you're facing, try to readjust and target younger entrepreneurs. Now, if you're doing well, and if you're really, well prepared and you're just very confident, being the young gun actually turns into a differentiator. I can't tell you how many times I've heard from prospects, wow, you remind me of when I was younger. Wow, blah, blah, blah. Once you're young, again, like people write you off early up front, but if you can win back that respect fairly quickly because of how prepared you are and how smart you are, it actually becomes an advantage. Because, wow, this young gun's working really hard for me, and he's very bright. And that allows you to stand out a lot more than just being another gray-haired banker walking in and trying to pitch a term sheet. And use that to your advantage when you're communicating in pitch meetings. Say, I have youth on my side. I'm hungrier than other people. I want to take on that smaller deal, or I want to work harder and push risk harder on behalf of you, and communicate. The purpose of a commercial banker is that you're an internal advocate for that client. Not only are you bringing that client into the bank, but you have to represent their interests when you're dealing with risk to approve that deal. And if you can communicate to them, hey, listen, I care more. I have a lot more to prove, so I'm going to work twice as hard in front of risk. That wins a lot of loyalty with clients. And then lastly, typically, senior bankers have the luxury of already having a ton of COI leads and picking and choosing the larger deals to get quicker to their budget, right? So I would see a lot of these senior bankers that they would just fund, 3 big mortgage deals for $20 million and boom, they're done their budget. Whereas I had to take on a lot more smaller $1 or $2 million deals to make that same amount of volume. And, I looked at that as a disadvantage early on, but in reality, that's an advantage for me because no one else is going after those smaller deals. Sure, I'm going to have to work as hard, much more hard, but at least then I'm doing deals, I'm doing more deals, I'm meeting more people, I'm meeting more COIs, I'm working with more lawyers and accountants on all these deals. So over time, my brand multiplies at a faster rate than if I just were to do those same 3 deals. So look at these smaller deals as an advantage for you to cut your teeth on and quickly develop your experience and network and prove yourself. Because say, for example, you do a small $1 million deal with an accountant and a lawyer, and you do another deal a year later with that same accountant or lawyer, they're already familiar with you. You're a known entity to them. So focus on those smaller and tougher deals to get those across the line. So that's really it for today. Hopefully you found the video helpful. I know I kind of blazed through this, but there's a ton of areas where you can kind of get some deal flow. And I think this is really just trying to download everything that I've learned over the years I've spent in commercial lending. If you found the video helpful, please do like and subscribe to the channel. If you have any questions or comments, just comment below, or you can reach out to me over LinkedIn. And if you have any clients that are looking to buy or sell businesses, as I had mentioned, I'm now in the M&A world. So if you have any Canadian clients, just reach out to me over Robly, or go to my website and reach out over email to Robert Bezed at Robly Capital. So thank you guys so much and have a wonderful day. Thank you.